Asia-Pacific markets declined on Monday as investors assess China's business activity numbers released over the weekend. The Manufacturing Purchasing Managers Index, or PMI, fell to a six-month low of 49.1, falling further below the 50 mark that separates growth from contraction. Meanwhile, non-manufacturing PMI climbed to 50.3, up from July's 50.2, the 20th successive month of expansion in the service sector. Separately, the Caixin manufacturing PMI for August showed an improvement in the country's manufacturing activity, which expanded to 50.4 compared to July's 49.8, beating expectations. And traders are looking ahead to more economic data coming out from major markets in the region, including inflation numbers from South Korea, Australia's second quarter GDP, as well as data on pay and household spending from Japan later in the week. Let's get more on this now with Tim Waterer, Chief Market Analyst at Caixin Trade. Good to have you back with us on the programme, Tim. Now, we have two separate PMI numbers here, giving us a mixed picture about China's factory activity. Can you help us understand more about the current situation?
Good to be with you again. Yeah, that's right. We've had a number of different readings to digest in the past few days. We had the official manufacturing numbers over the weekend below that 50 level. The private survey numbers we saw today a little bit better, but you'd have to say on the whole, and also over the course of really the past year, we've seen a lot more numbers below 50. That's the key level that you mentioned. So I think what we've seen is a continuation of this trend of manufacturing weakness. Now, the services sector, non-manufacturing, that has been performing better. So it's really manufacturing sector that has been struggling. And if we look at the through the actual details today, we're seeing that there are some strength from abroad. So I think there is an increase in demand from overseas markets for Chinese goods. So I think that's limiting the downside for now. But that weak demand, domestic demand picture in China, that's what's really been a limiting factor. So all told, I guess it's more of the same what we've seen in the numbers, which is that the Chinese economy is still operating on less than full cylinders right now.
Right, and we've seen a decline in new orders over the month too. What are the main reasons for that?
Yeah, I think we can really trace a lot of the problems back to the property sector. That's sort of, I think, the crux of the issue. We know that in China, there is a larger percentage of investment tied up in the property sector. Now, property has a number of advantages, but it's an illiquid asset, so hard to get funds easily if you need them for other means. Now, the other problem with China at the moment is that their home prices have been in a downward spiral. So the level of people's investment has been declining in lockstep with what's happening to the property market. So that's causing some decisions to be made in terms of discretionary items and the like. And that's limiting the overall demand, and that spreads across to the manufacturing sector as well. So I really do put it down to the people having a lot of funds tied up in the property sector, and that's been a tale of woe for the Chinese economy now for a couple of years.
And do you expect policymakers to press on with more stimulus measures to help boost activity?
I think that's something they definitely have to look at, because if you look at the recent span of numbers, that that 5% GDP target really is going to be called into question. Now, we have seen a number of smaller steps, incremental steps from the Chinese government to try and address the weaknesses that there are. We have the latest being financing measures. Once again, I'm not sure that that's the solution that they need. I mean, I think one thing they could look at is the government going into purchase properties and expanding their fiscal stimulus program. But the downside of that is that that can rack up some hefty deficits, and that's something the Chinese government has wanted to avoid through till now. But perhaps if we see continuation of this, the key macro numbers heading south, then they may need to look at other measures, such as taking further steps on that fiscal front to shore up the property sector, which in turn would hopefully then spur demand in other areas, including in manufacturing.